Okay, so you're interested in investing in Spain,
Yeah.
but maybe feeling a bit overwhelmed by all the choices out there.
It can be a lot.
We're diving into this analysis from a Spanish investing expert
Right.
to try to help you navigate those waters.
Exactly.
He actually starts off with kind of a surprising insight.
Hmm.
He says that the most popular funds in Spain
Yeah.
aren't necessarily the ones giving investors the best returns.
Yeah, that's one of the things that I've found most interesting about this is that it's not always the case.
Yeah, you would think like the funds that are raking in the most money would be the top performers.
Yeah. It would seem that way.
But that's not always the case.
No, he found that a lot of times it's the big banks that are pushing products that might not have the best returns or even the lowest fees.
Interesting. And he actually calls out one specific fund as an example.
He does.
CaixaBank Monetario.
Right?
Have you heard of this
Well,
one?
I haven't personally invested in it, but I've certainly heard of it.
Okay, so what's the deal with this one?
So it's a money market fund,
Okay.
which basically means that it invests in very short-term debt.
Mm-hmm.
Now, because it's based in euros, its performance should ideally mirror something called the euro short-term rate.
Okay.
You can think of it as like the benchmark for short-term euro interest rates.
Okay, so if the euro short-term rate is high,
Yeah,
this fund should be doing well.
exactly.
Okay.
So at the time of this recording, that rate is actually pretty good. It's at 3.75%.
Okay.
But here's the catch. CaixaBank Monetario charges almost a 1% fee,
Wow.
and their current return is only 2.1%.
So you're actually losing money compared to just holding on to euros because of their fees.
Yeah, you're not even keeping up with just the basic interest rate environment.
Wow. That's crazy.
It is, and this is why he emphasizes this point so much. He says, don't limit yourself to your local bank.
Mm-hmm.
Branch out, explore independent firms.
Yeah.
You might find significantly better returns and lower fees.
Yeah. Don't just settle for what's familiar, right?
Exactly. Shop around.
Do your research.
Yeah, there's a whole world of options out there.
It's interesting, too, how much this ties into just like general personal finance advice, too.
Absolutely.
Like you should be shopping around for your financial products anyway.
Always. Yeah.
This is a great example of that.
And this is just one example. He goes on to highlight a lot of other pitfalls that Spanish investors often fall into.
Well, let's get into it.
Oh.
So we talked about how, people might not be choosing the funds with the best returns. But he also says that a lot of Spanish investors, they tend to play it too safe.
Right.
They're just focused on keeping pace with inflation.
Which, on the surface doesn't sound like a terrible thing.
Yeah, you're not losing money,
Right.
but you're not really growing it either.
You're just kind of treading water.
Exactly.
And he's saying, look, you need to make your money work harder for you.
Mm-hmm.
He illustrates this with an example. He says, imagine you invest 10,000 euro for 25 years
Okay.
with a stock-heavy portfolio.
Mm-hmm.
Achieving an average annual return of 8% over the long term is entirely possible.
Okay. That seems to be the benchmark he uses throughout this whole analysis.
Yeah, 8% seems to be his average that he thinks people can achieve.
With a well-diversified portfolio.
Yeah, right.
Okay.
So at that 8% return, your 10,000 euro grows to a cool 73,000 after 25 years.
That's pretty good.
Not bad, right?
Yeah.
But here's the kicker. If you put that same amount in a typical savings account,
Okay.
with, let's say, a 3% return,
Okay.
you'd only end up with 21,000 euro.
Wow, that is a massive difference.
Huge difference.
And it really highlights the power of compound growth over the long term.
Yeah, and this is something he emphasizes throughout the whole analysis time, is your friend when it comes to investing.
And that's where his affinity for incorporating stocks into a portfolio really shines through.
Right. He's not just talking about hiding your money under a mattress.
Yeah.
He wants you to invest it, and he's a big believer in the long-term approach.
Not trying to time the market or chase quick wins.
Right, exactly.
Yeah.
He wants you to be strategic about it. And that's where index funds come into play. This
Okay.
is a big part of his strategy.
So he's a huge proponent of index funds,
Huge.
especially from well-established firms like Fidelity, Vanguard, iShares.
Yeah, the big names.
Why does he favor those over, say, actively managed funds?
Well, there's a few key reasons.
Okay.
First off, these companies have a proven track record.
Hmm.
They've been around for decades. They've weathered all sorts of economic storms.
It's seen it all and come out on top.
Exactly. So they're not going to disappear overnight.
Mm-hmm.
Precisely. And because index funds aren't trying to pick individual winning stocks
Right.
like actively managed funds do,
Mm-hmm.
they typically have much lower fees.
Yeah, that's a big one.
Remember that CaixaBank fund
Right.
with the nearly 1% fee? These guys are usually a fraction of that.
Which can make a huge difference in your net returns over time.
Absolutely. And finally,
Yep.
index funds offer fantastic diversification.
Right.
You're essentially buying a tiny piece of hundreds or even thousands of companies all at once.
Mm-hmm.
So your risk is spread out.
You're not putting all your eggs in one basket.
Exactly.
Yeah.
He really emphasizes the importance of diversification,
Yeah.
especially for those new to investing.
Right.
Now he goes a step further,
Okay.
and he actually provides some concrete starting points.
Oh, great.
He highlights 3 index funds
What?
that he believes are particularly well-suited for someone just dipping their toes into the investing waters.
I'm ready to take some notes.
Okay, first up, you
Yeah.
have the MSCI World Index Fund. This one's a real workhorse in the investing world.
What makes it so special?
So the MSCI World Index tracks the performance of roughly 1,600 large and mid-cap companies
Okay.
across 23 developed markets.
Wow.
It's like a one-stop shop for global market exposure.
So with this one fund, I could essentially invest in the entire developed world.
You got it.
Okay.
And the historical returns are tough to beat.
Yeah.
Since 1987, the MSCI World has delivered an average annualized return of around 8.59%.
Wow. That's even better than the 8% benchmark we talked about earlier.
Yeah, it just goes to show the power of long-term diversified investing.
And low fees, presumably.
And the best part is there are plenty of low-cost index funds out there that track this index.
Yeah.
He specifically mentions the Fidelity MSCI World Fund as a great option because of its minimal fees.
Low fees and solid returns. What more could you ask for?
Exactly.
Okay, that's one down. What about the next recommendation on his list?
Okay, so for investors looking to add an extra layer of diversification and potentially tap into higher growth, he recommends considering emerging markets.
Okay, so we're talking about countries like China, India, Brazil.
Yeah.
Those rapidly growing economies.
You got it.
Okay.
The expert highlights the potential for high returns with emerging markets.
Yeah, higher risk, higher reward, right?
Exactly. But he's also transparent about the fact that they can be more volatile than developed markets.
Of course.
You know, you're not going to get those high returns without taking on a little bit more risk.
Right.
But while long-term returns for emerging markets have been strong, recent performance has been a bit more up and down.
Yeah, that makes sense.
He emphasizes that short-term fluctuations are normal.
Right.
And encourages investors to focus on the long game.
Don't panic if things get bumpy, just ride it out.
That's the idea. He believes that for investors with a longer time horizon, dips in the market can actually present excellent buying opportunities.
So patience and a bit of courage are key.
Absolutely.
Okay, so we've covered a couple of relatively safe bets.
We have.
But what about those who are comfortable with a bit more risk?
For those with a bit of a risk appetite, he throws in a wild card.
Oh.
The Nasdaq Q100.
The Nasdaq Q100, that's the one with all the big tech companies, right?
You know, this index is composed of the 100 largest non-financial companies listed on the Nasdaq Q stock market.
Okay.
Think Apple, Microsoft, Amazon, all those household names.
So it's heavily weighted towards the technology sector,
Right.
which has obviously seen explosive growth in recent years.
Exactly.
Yeah.
And those gains are reflected in the index's performance.
I
The
bet.
Nasdaq Q100 has had an incredible run lately.
Right.
But he's quick to point out that with that incredible growth
Yeah.
comes increased volatility.
Sure.
So buckle up. It could be a wild ride.
Yeah, those tech stocks can go up really high, but they can also crash and burn.
Exactly. He stresses that the Nasdaq Q100 is not for the faint of heart.
Right.
It's for investors who are comfortable with a higher degree of risk and potential for short-term swings in their portfolio.
So not your grandma's retirement fund.
Definitely not.
Okay.
Now, he does mention that the big name index funds tracking the Nasdaq Q100 aren't directly available to Spanish investors.
Oh, that's a bummer.
But he offers a solution.
Okay. What is it?
My investor,
The Spanish investing platform.
precisely.
Okay.
My investor offers a Nasdaq Q100 ETF,
Okay.
which is essentially a basket of stocks that mirrors the index.
Okay.
This gives Spanish investors a way to get in on the action.
That's good. So there's always a workaround for those who know where to look.
Exactly. Now, moving on from index funds,
Okay.
the expert also highlights a few Spanish active fund managers
Okay.
that he believes are worth considering.
Okay, so these are funds where the managers are actively picking stocks.
Right. Trying to outperform the market rather than simply tracking an index.
Right. Okay.
Right. And this is where his analysis gets really interesting.
Okay.
He emphasizes that you can't just jump into any actively managed fund. He's very particular about who he recommends.
Yeah, I imagine he's got some pretty strict criteria.
He does. He believes that a manager's long-term performance is the most reliable indicator of their skill.
Right. Anybody can get lucky in the short term, but a good track record speaks volumes.
Exactly. He won't even consider recommending someone with less than 10 years of experience.
He wants to see how they've navigated different market cycles.
Exactly.
The ups and downs, the booms and busts.
Exactly. And he doesn't just throw out names.
Okay.
He dives deep into their strategies, their strengths, their weaknesses.
Yeah.
He even gets a little bit personal with one of them.
That'll tell me more.
So the first manager he discusses is Bestinver.
Okay.
And it turns out this was actually his very first investment. He put his own money where his mouth was.
He did.
And invested his first 30,000 euros in their Bestinver International Fund.
Wow. Now that's putting your faith in a manager.
It is, but they must have a pretty impressive track record to warrant that kind of trust.
Right.
They absolutely do.
Okay.
Over a span of 40 years, Bestinver has achieved a remarkable 12.66% average annualized return.
Wow. That's even better than the MSCI World over the same period.
It just goes to show that while index funds are fantastic for their simplicity and diversification, there will always be skilled active managers out there who can potentially outperform the market.
So there's a place for both approaches in a well-rounded portfolio.
Absolutely.
Okay, so Bestinver has a phenomenal long-term track record.
They do.
But what about their more recent performance?
That's where things get a little more nuanced.
Okay.
While their long-term performance is undeniable. Bestinver's returns have slowed down a bit over the past decade.
Okay.
They've averaged around 5.35% annually in that time.
Still a respectable return, especially considering the market volatility we've seen in recent years.
Absolutely.
Yeah.
But it does highlight that even the best managers can go through periods of underperformance.
Right. And it's really hard to consistently beat the market year after year.
Exactly. And he's very upfront about that.
Okay.
He wants investors to understand that past performance is never a guarantee of future results.
Always important to do your due diligence and not rely solely on past glories.
Precisely. Now moving on from Bestinver.
Okay.
He also highlights Azvalor as another Spanish active fund manager worth keeping an eye on.
Azvalor. That name rings a bell.
Yeah.
They have some connections to Bestinver, don't they?
They do.
Okay.
Azvalor was actually founded by a group of former Bestinver employees.
Oh, interesting.
Back in 2016.
Okay.
So they come from that same value investing school of thought.
Interesting. So they're carrying the torch in a sense?
You could say that, and they've been doing a remarkable job since their inception.
Okay.
Their performance since 2016 has been impressive, averaging around 9.9% in annualized returns.
Wow.
They've even managed to outperform Bestinver over the past 5 years.
So they learned from the best and then they surpassed them.
Yeah, it seems those Bestinver alumni brought some serious skills with them.
Right.
So Azvalor is definitely a contender for investors seeking that value-oriented approach.
Interesting. Okay, so we've got Bestinver.
Yeah. Yeah.
I've got Azvalor. Any other contenders in the Spanish market?
He does have a couple more up his sleeve.
Okay, let's hear it.
So he throws in a bit of a curveball with his next recommendation.
Okay.
Numantia Patrimonio Global.
Numantia Patrimonio Global. That's a new one for me.
Yeah, this one's a little bit more under the radar.
Okay.
It's managed by a guy named Emilio Quintana.
Yep.
What makes them stand out?
Yeah, what is it?
Well, for starters, Quintana is a much younger manager compared to the seasoned veterans at Bestinver and Azvalor.
Okay.
And his fund has a much shorter track record.
Yeah, I was going to say, didn't he say he wouldn't recommend anyone with less than 10 years of experience?
He did.
So what's going on here?
He makes an exception for Quintana, and it all comes down to his investing philosophy and approach.
So what is it about Quintana that caught his eye?
Well, for one, Quintana is incredibly transparent about his investment process.
Okay.
He lays out his methodology in detail.
So no black box investing. He's an open book.
Exactly. And despite his relatively short track record, Quintana's performance has been nothing short of stellar.
Oh, really?
Over the past 5 years, he's delivered an average annualized return of around 14.46%.
Wow.
Consistently outperforming both Azvalor and Bestinver.
Wow, those are some serious numbers.
Yeah.
It sounds like he's quickly making a name for himself.
He certainly is, but the expert does acknowledge that a 5-year track record, while impressive, is still relatively short in the grand scheme of things.
Yeah, it's all about balancing risk and potential reward. The younger manager might offer the potential for outsized returns, but there's also less of a track record to assess their long-term staying power.
Exactly.
So it's a judgment call.
It is.
Okay.
Now, moving on to the next manager on his list, we have Cobas.
Cobas.
Led by Francisco Garcia Parames.
Parames, he's often referred to as the Warren Buffett of Spain.
Yeah, a legend.
Yeah, I've definitely heard of him.
He's a legend in the world of value investing.
Yeah.
And as you might have guessed, he has a history with Bestinver.
Oh, does he really?
He was actually one of the key figures behind their incredible early success.
Interesting.
Before he left to start Cobas in 2016.
Wow, so he's like the granddaddy of value investing in Spain.
You could say that.
And he's still at it.
And while Cobas got off to a bit of a rocky start, they've made a remarkable comeback since 2020.
Really? What happened? Did they change their strategy, or was it just the market?
It was a little bit of both. They made some adjustments to their portfolio.
Okay.
But their turnaround can also be attributed to a shift in the overall market that favored their value-oriented approach.
Makes sense.
Over the past 5 years, Cobas has achieved a solid 10.39% average annualized return.
Okay.
Proving that even seasoned investors can adapt and thrive in changing market conditions.
It's a good reminder that there are always ups and downs in the market.
Absolutely.
And what works in one period might not work in another.
Right.
Flexibility and adaptability are key.
Absolutely. Now, before we move on from active fund managers, he throws in a bonus pick that's not based in Spain, but is available to Spanish investors through My Investor.
Oh, okay, through that platform we talked about.
Yeah, the JP Morgan Global Dividend Fund.
Ah, yes, for those who love a steady stream of passive income.
Exactly. This fund focuses on companies with a strong track record of paying dividends, which can provide a nice stream of income on top of potential capital appreciation.
So a nice 2-for-1.
Exactly. Very interesting.
A solid option for income-focused investors.
Okay, so we've covered a lot of ground here.
We have.
Index funds, active fund managers, money market funds. It's been quite the deep dive.
It has, but we're not done just yet.
Oh, there's more.
He concludes his analysis with a fascinating comparison that I think you'll find very insightful.
Okay, I'm intrigued. He compares the top-selling investment funds in the U.S. to those in Spain, and the contrast is pretty stark.
Oh, tell me more about this U.S. versus Spain showdown.
Okay, so in the U.S., the top-selling funds are all about low-cost index funds. The top 3 spots are dominated by funds tracking the S&P 500 or the total U.S. stock market.
So very U.S.-centric.
Yeah, it's clear that American investors have really embraced the power of passive investing.
Yeah, it seems like it's really caught on there.
And low fees. They're really fee-conscious over there.
Makes sense.
Now, contrast that with the top-selling funds in Spain, which tend to be much more conservative.
Really? So what are we talking about?
Money market funds and bond-heavy funds reign supreme.
Interesting. So a more risk-averse approach overall.
It seems that way.
Interesting.
And let's not forget about those fees. The average fees for investment funds in Spain are significantly higher
than in the U.S.?
Yes.
Okay.
So quite a difference.
Yeah, very interesting. It's fascinating how different the investing cultures can be.
It is. And it just highlights that, what's popular isn't always what's best.
Right. So what's the takeaway here?
The takeaway is don't be afraid to be different.
Okay.
Don't be afraid to go against the grain.
Just because everyone else is doing it doesn't mean it's the right approach for you.
Exactly. You need to do your own research and figure out what makes sense for your individual circumstances.
And are there any other takeaways from this U.S. versus Spain comparison?
I think the big one is the importance of fees. We've talked about it a few times already.
We have.
But this comparison really drives it home.
Okay.
Those high fees can really eat into your returns over time.
They can.
So it's crucial to be mindful of them.
Absolutely.
When you're choosing your investments.
Yeah. Shop around.
Exactly.
Yeah.
Don't just go with the first thing that comes along.
Or what your bank tells you is best.
Exactly.
Okay.
You have the power to choose.
Yeah, I like that.
So use it.
It's about taking control of your financial future.
Exactly.
And not just letting someone else dictate what you should be doing with your money.
You're in the driver's seat. You really are.
And it's great that this expert is, he's encouraging people to be more proactive.
Yeah.
Not just to kind of like blindly follow the herd, but to really think for themselves.
Absolutely. And, it's not just about taking risks for the sake of taking risks. Right. He also recognizes the importance of having a portion of your portfolio in those really safe havens.
Right. It's all about balance, isn't it?
Exactly.
We need a mix of growth-oriented investments and those that provide stability.
Absolutely. And when it comes to those safe bets, he's a big advocate for money market funds from well-established and reputable firms.
Yep.
And he actually specifically mentions a few.
Oh, does he?
Yeah, he talks about Groupama Trésorerie, AXA Trésorerie, and La Française Trésorerie.
Those names sound familiar, especially Groupama Trésorerie.
Yeah.
Didn't he mention that one earlier as like a top performer?
He did.
Okay.
Remember how we talked about the importance of comparing money market funds returns to the euro short-term rate?
Right.
Well, Groupama Trésorerie consistently outperforms many of its peers.
Oh, wow.
Making it a solid option for investors who are parking cash short-term.
Okay, so even when it comes to the safest investments, it still pays to shop around and compare.
Always. Yeah.
Those seemingly small differences in returns and fees can really add up over time.
Oh, absolutely. Especially over the long term.
Right.
Those little differences can make a big impact.
Exactly.
And he stresses that with any money market fund.
Yeah.
It's crucial to keep an eye on the euro short-term rate because that rate directly influences how much interest these funds can earn.
Okay.
And it fluctuates over time.
So it's not a set it and forget it kind of investment.
Not really.
You need to stay informed and make sure your money is working as hard as it can, even in the most conservative corners of your portfolio.
It all comes back to that theme of being an informed and engaged investor.
Right.
Don't just assume that the default option or the most popular choice is the best fit for you.
Do your research.
Exactly.
Knowledge is power, especially when it comes to your financial well-being.
I love that takeaway.
Well, that's such a powerful message to end on. We've learned so much in this deep dive.
We really have.
From debunking common myths about popular funds to exploring a range of investment options.
Yeah.
It's clear that informed decision-making is paramount.
Absolutely.
So as we wrap things up,
Yeah.
what's the one key takeaway you hope listeners will walk away with?
You know, if I had to distill it down to one central theme, it's this. Don't be afraid to question assumptions. Do your research. Yeah.
And explore all your options.
Well,
the world of investing can feel intimidating.
Yeah, it can.
But it doesn't have to be.
Right.
By arming yourself with knowledge and taking a proactive approach, you can create a financial future that aligns with your unique goals and aspirations.
It's about taking control of your financial destiny.
Yes.
And with the insights we've gained from this expert, I think our listeners are well on their way to doing just that.
Me too.
So until next time, happy investing, everyone.